Okay, so I took this trade, but this is a prime example of if I'm able to analyze something well, that means I should be able to trade well, right? And so the setup was a important factor in my trading here. So I took this trade. Now I got out early, but this is an example of this is an example of properly weighing the criterias that define the movement. Okay, so when I look at here, so when I'm looking here, I'm looking at this trend that's going up. Okay, so it sets up this trend. All right, now it sets up this trend here. Then it's up. Then the price hit here where the resistance is. Then it's stabilized into a range, and then it dropped down. Okay, so now there's some conflicting information in my thinking. Is this okay? So there has been a change of character here, right? It's a break of structure. It dropped down here. So there's a conflicting information. There's some conflicting information here, right? So this is the trend that's going up. It held in this range, but it broke out of that range, and then it hit this area, okay, which is the support area, went back up. And so so there was a conflict here, okay? There was a conflict of interest, okay? So what I did was I got in here so I got in here, and then it jumped a little bit, and I closed the trade. But had I held it, that could have been, now this is a demo. Now this could have been probably about 60 to 80 more dollars, right? So we're looking at 1, 2, 1, 2, 3, 4. That's about 90 bucks right there. That could have been an additional 90 bucks with just one lot. Okay, so my analysis was correct. Okay, but I put a stop loss in this area. Okay, so I put the stop loss. So this is a trend here. I put a stop loss right here. Okay, I put a stop loss right here, and I put the profit target. I put the profit target right around here. Okay, I put the profit target right around here where this resistance is. And so I could have at least made maybe 60 some odd dollars instead of making $40, right? But had I held it, it could have gone all the way up here. So there is some concerns in my trading. So the loss would have been, if that was 40 bucks, that would have been 20 bucks plus $5. That's about a $25 risk to make approximately about $60, right? So that would have been a 2 to 1 R right here. That would have been a 2 to 1 R. Just taking this trade right there. Again, there was a conflict, but my initial assumption is that it's uptrending. Okay, it's uptrending, despite the fact that it broke of structure, but it quickly came back. There was massive strength in the drop. It came back up, and I took this trade thinking that it's going to go back up, knowing that it's based on the backdrop of this this rise in price. Range bound, dropped, and came back, and so my thesis was correct in thinking that if I put a stop loss here, get in here, take profit here. So that turned out to be okay. Okay, so did I do the right thing? Did I make the right trade? Right? Or should I have, because it broke through here, broke the support, it broke through the support, dropped. Okay, so should I have been thinking, okay, so this is a complete reversal here. Is it a reversal? Should I have been thinking about a reversal, or should I have continued to think that it is essentially is in a upward trend? Okay, so that's something that, so I need for future reference of how I need to go about doing this, right? So I mean, look at that right there. So maybe this is, if I were to extrapolate it out of here, maybe it is part of this little movement of channel that's been created on a upward kind of a momentum here, just like that, like that, right? So maybe it still fits into that same scenario where it's in a channel, so my thinking can so the thesis is still valid here. It's still valid because it's still trading off that range. Okay, it's channel, the channel, upper trend channel. So that would have been the right way of thinking, but it worked out okay.